Buddy, Blair Nightingale here. Market Monday. You can't see it, but we've got the studio undergoing some renovations right now. So a little bit different setting for our meeting tonight. It is Market Monday. You know, guys, I say this every week, but I actually mean it. I actually mean it. Today we have a special episode. And the reason it's special is because we've actually never talked about this specific topic before, okay? So I hope you guys are note takers. I hope you're leaning in. I gotta say, our topic tonight, I hear some people saying some things surrounding this topic that I hope to shed some light on, okay? That I think, if I can use this phrase, the truth will set you free. There's a phrase alternatively that says, what you don't know can't hurt you. And of course, there's absolutely no truth to that statement. What you don't know can't hurt you. Listen, financially, I was talking to a friend of mine earlier today, and I said to her, how many finance courses did you take in high school? Right? There's a whole background to this conversation. How many finance courses did you take in high school? Right? How many finance courses were offered? Now, I've asked this question before online to groups of students, and I have occasionally heard somebody that gave, we had maybe a home ec class that did a little bit of this, or that. Very, very rare. What am I saying? Leaving something like high school, right? Or even at home, okay? Being prepared at home financially, the amount or lack thereof of financial education that young adults, and at one time us, right, are typically almost in majority, the lack of education that we receive is absolutely staggering. Now, why do I say that at the top of tonight's episode? Because when it comes to taxes, and specifically taxes and trading, there's not a lot of knowledge here, and I don't think what we don't know doesn't hurt us. I think what we don't know does hurt us, because there are some distinct advantages of knowing more about how taxes work as a trader that I am going to show you tonight, that they are going to be able to help you. Just having this information is going to help you. This is something that's going to help the way we think. Some of the statements I hear people say, I'm going to go over a couple of those tonight. Statements that I think are self-defeating. They are financially self-defeating statements. And this is a topic that, honestly, a lot of people, I don't necessarily want to say it like that so much, I think for all of us, this is a topic that should be way at the top of our list. Way at the top of our list. The wealthy, I'm going to say this off the top, the wealthy understand how to use the tax code legally, okay? Legally, ethically, to get their taxes to a legal minimum. Legal minimum. I'm going to come back and talk about this later in the broadcast. The wealthy understand how to use taxes well. And I'll say it again, legally, ethically, but well. Now, that doesn't mean they understand the whole tax code. And I'm not going to overwhelm anybody tonight with minute details of the tax code, okay? I'm going to say up front, I am a securities advisor. I have a securities license, but I'm not a tax advisor, all right? I'm not a tax advisor. I'm going to show you tonight where you can go and you can learn a significantly greater amount about taxes and how it works for you as a trader. But we'll get to that later, and you can get that from somebody. This is specifically what and all they do. In fact, I think we're going to have them on the program before too long. But I want to say this is a very important topic, and the people who understand how to use this to their advantage have a major advantage. But guess what? So many of us Just avoid it. Just avoid it. And I am glad to have this episode with you tonight because we're not going to avoid it. We're going to talk about this tonight. So Susan, I see you there. Of course, quickly, everybody who's on, we've got comments over here. Okay. I love hearing from you guys. I see Corvus. I see Susan. I see Jeffrey. Susan's tagging people like she always does. Hello to I see Jeffrey. You switched over there. I got you. Say hi to us. Let us know you're here. Love to see you guys on here. If you have questions as we go along, listen, this is the goal. I want to help you guys be better with your money. I want to help you guys save money. What I'm going to talk about tonight has saved me a tremendous amount of money. Now, let me say that again. I can never make promises on here when it comes to the stock market, right? I can teach you how to do it, but we aren't even allowed to make promises about your future results in the stock market. You will do this. You will do that. Of course, I don't know that. I can work with you. I know the power of it. I've seen it. But here's what I'm going to tell you from taxes, not investments, taxes. I've saved tremendous amounts of money doing this. Why am I hitting this so hard in the beginning? Because I want us to understand that this is extremely important, but it's also not as complicated as the tax code itself, right? So I'm not going to go diving into the tax code, right? But I am going to give you some keys here as traders that I think you're really going to want to know. So I think I've laid that on thick, right? Have I set that up right? I want to make sure we're all invested. We're listening closely. I think this is really, really helpful stuff. And like I said, sometimes this one just slips through the cracks. And, I hear some conversations even in our culture, all right? I'm not taking this in a political direction tonight, but I can tell you that there are conversations about taxes in our culture. Obviously, our former president, that was a big conversation. And I'm not making a statement about him tonight so much as I'm saying, didn't that bring taxes into the conversation, the national conversation? And I noticed that in those conversations, I could tell when a person knew something about the tax code and when somebody didn't. When they understood how the wealthy, again, legally, ethically, can not break the law, break the tax code, all these things that are worth saying, because people start to assume, well, wait a minute, if we're talking about lowering taxes, is that okay? And I can tell that they've never heard any of this stuff before, right? They've never heard any of this stuff before because this is what people do. This is what the wealthy do with tax. The tax code, in particular, traders. Okay, something I want you to understand as traders. So let's just get into this right now. You go ahead and pop your questions in there as always, and I will check back as we go. Number one, trading and taxes. Trading and taxes. So let's just lay the foundation here. Number one, you are required, I am required to pay taxes on all income, right? If it's income, there's tax, right? That's how it works. That's how everything in our culture works. If we make money in the United States of America, we're going to pay tax on that. So trading is no different, right? Trading is no different. If you and I make income from trading, then we will pay tax on that, right? That's how it'll work. So I just want to lay that very basic foundation. Most of us know this, right? It's just a good spot to start in. We're going to pay taxes, okay, if we are making money. And I want to say, that is what trading is all about, isn't it? Right? Trading is about producing income. That's what the opportunity here is for you and me, is that we would use our trading account to make money. Now, some of you out there say, well, geez, Blair, that's pretty obvious. But I think it's worth saying, right? We're looking to make income. Because I talk a lot on here about process before profit, right? Amateurs chase profits, professionals manage risk. So the skill set actually flips it, where we're not so focused on profits, because that's not how we get to profits, right? If we chase profit, it tends to elude us. If we stick to process, it produces fruit. That's what we talk about on this program a lot. That said, what's the fruit? What's the end goal? We want income. And if we get income, we got taxes. So now as a trader, this is an even more important topic, right? We're bringing it home tonight. This is something we've got to understand. And I know that there can be some fear here. There can be some confusion here. There can be some emotion here. And I hope to work through some of that with you guys tonight. Example, some people I've heard say this, whether it's, the lottery. I would never want to win the lottery. Or I sometimes hear this. So anybody out there nerdy enough to watch Jeopardy? My cool factor just went down. I love Jeopardy. I watch Jeopardy. You know what I hear some people say sometimes? Oh man, I would never want to be on a game show. You know why? Because you got to pay the taxes. You got to pay the taxes. And I think to myself, well, yeah, but you're going to make the income too. You're going to pay tax, but you're going to make income too, right? If you're paying tax, there's income. So sure, I don't want to pay a lot of tax. I'll pay the tax that's necessary to be paid, but I don't want to pay a lot of tax. But if I'm paying tax, it means I'm making money. And if I'm making money, right, then that means I'm better off than where I'd be if I wasn't making it. So I'll make the money and pay the tax. Okay. So like I said, I hear these things said and I go, well, you know what, if we think that through, that actually doesn't really serve us very well. Right? If I don't want to make any money, I don't want to trade because I don't want to pay the taxes. Well, that's how income works, right? So here's what we could do. Let's jump ahead a little bit. What if I could make the money and then understand the best way to navigate the taxes, right? That's an even better way still, right? So if I could be a profitable trader and understand how to optimize taxes, this is getting really good, okay? That's a lot better than I'll just pass on the opportunity altogether because I don't want to pay the taxes, right? So I think we've hammered that. So let's talk specifically. Jeffrey says, I've taken the Jeopardy test and I'm waiting for the call. Hey, man, you just hang in there, bud. You just hang in there and you let me know if you're ever on because I will watch. I do. I love Jeopardy. Number two, okay? Number two. So, okay, we're talking about taxes. What's the simplest way to really start to define this, okay? What tax rate am I going to pay? What kind of taxes do I have to pay, okay? Because doesn't it get complicated from here, Blair? It can, but really at first, no, not really. It's fairly simple at first, right? We're just stepping into a new room here, okay? This is taxes. And we're just getting past the door right now, okay? We know the room exists. We're not afraid to go in it anymore. But what's the doorway, okay? I'm going to give you just the doorway into this room now of trading and taxes, okay? Here's the first thing. You're going to pay either short-term or a long-term tax. Now, the actual way we say that, the term that the IRS or Wall Street refers to this as is capital gains tax, meaning you owned, let's say, shares, right? We teach options on here as well, or we talked about cryptocurrency, which is a little bit different, but we talk about shares of a stock. If that stock is purchased, the share price goes up, you make money, you sell it, you bought it at $5, you sold it at 10, you made a $5 profit. That's a $5 gain. Right? So you have capital gains because your position, your trade, your stock appreciated. It went up, right? Nice and basic. So you have to pay capital gains tax. The end of the year, assuming that you locked in that profit, right? And you did not take a loss that offset it. Let's just say you made $10,000 trading, right? Let's just say, theoretically, you and I made $10,000 trading. At the end of the year, we would have to pay tax on that. Now, there's two categories that your tax is going to fall under, okay? And it's fairly basic. This is fairly basic. Long-term or short-term capital gains, okay? Long-term or short-term. Long-term being over a year, meaning you held the stock for more than a year from where you purchased it to where you sold it. Now that's getting more into the long-term investing that we've talked about, isn't it? Right? We've been talking about trading. We've been talking about swing trading in particular, which is 3 days to 3 weeks respectively. Okay. Some plays you might be out in a day, some plays you might be in a little bit longer, but respectively 3 days to 3 weeks. So that's not going to fall under that long-term capital gains tax. That's going to fall under a short-term capital gains tax. Okay. So what you need to understand basically about this, to give you an idea of what this looks like for a trader, short-term capital gains, right? Short-term tax on what you make in your trading. It will be taxed at your income bracket. So I can't tell you what the bracket is because that's based on your annual income, okay? Now, there are different factors that play into how much taxable income you have personally at the end of the year. That's what you do on TurboTax or at home, or you pay somebody to do it for you. They figure it out for you, and you can do some things on your personal tax like IRA contributions and charitable donations and some different things. There are a few things that you can do on personal tax that can lower that tax rate, but your capital gains short term is going to go on to that tax return. You're going to have to pay that in the short term at your bracket. Now, keep in mind, if you take a big win, right? If you take a lot of gains, it can what? It could push you into another bracket. Anytime there's more income, right? Think about if you got a second salary, right? You got a second payment for, your job, whatever it might be, that could lift you into the next bracket. Okay. So again, you would end up in that case, you would pay more tax, but it would be because you're making more income. That's short-term capital gains tax, just at your tax bracket. Okay. Simply put, the long-term capital gains. Now, the IRS essentially wants to incentivize, encourage us to hold on to these positions longer. Okay. Now, I'm not talking about retirement accounts and things like that tonight. There are some unique and special tax things in there. We're going to come back to that later. But really what I'm just talking about is, generally speaking, you and I in a trading account, right, a personal trading account, if you have long-term capital gains, this is over a year, you've had it for over a year, and then you sell the stock, sell the position. In some cases, you could sell the option. There are long-term options as well. The tax rates are going to be 0%, 15%, and 20% respectively. Okay, now that depends on your income. Okay, so depending on what bracket you're in our tax system, you would pay one of those three as of last year anyway. Okay, that's what you would pay. So they're lower, right? If you look at the brackets, you can essentially pay less tax, right? Because in your personal tax bracket, you can get up, I think the highest one is close to 40%, right? So you could pay, in this case, the highest is 20% if you were making significant capital gains. So to hold it longer means that you would get less tax burden. However, as traders, we are not going to be doing that very often, right? That might be for our investing money, right? Because we talk about trading here doesn't mean we don't want to look at long-term investing. Okay, that's not out the window totally. We just focus on short-term trading because we believe in that as a vehicle for wealth creation, right? Not for taking wealth and multiplying it and preserving it generationally, but actually creating it with trading. So we do both, but we focus a lot on trading, don't we? So that puts us in the short-term capital gains category. Okay, so then that lays the foundation. We're going to pay taxes. Okay, there's really two ways to look at this, long and short. For us as traders, it's really going to come down to short. Okay, and then what's the next step from here? Well, one thing I want to throw out is just, some people will ask sometimes, well, how does this all work? How does the IRS know it? Well, your broker, we've talked about on here before, which is essentially a bank, right? It's a bank account for buying and selling stocks. It's really the simplest way to put it. They are going to report, right? They're required to do that. They're going to report. You're going to have access to those files. And of course, when you file taxes, you will need to include that in there. Okay, so that is a part of any income you have. Obviously, you have documents that show the income that you've made, or in some cases, if you've taken losses, then obviously then you could use that as well. But that's something that your broker will take care of. I see a couple questions here. Troy says, I have. If I hold on to a stock for a month, that is long-term for me, says Jeffrey. See, now Jeffrey is a trader, right? He's thinking and acting like a trader. A month can be a long time, right? A month, that's 20 trading sessions respectively in a month, right? So we don't tend to hold positions for very long. I do not hold positions for a month, okay? There are certain strategies we teach where we're more common for a monthly position, maybe something like a credit spread. I would be more favorable at looking at doing those for a month rather than just say 5 to 10 days. But other positions are very short. So I understand what Jeffrey's saying completely. So this is why this applies to us here. So specifically now, Jeffrey also said, how much should we set aside for capital gains tax? Well, it really, like I said, is going to come down to what is your bracket, right? This is where it gets into tax planning somewhat. What's your bracket, right? If you make a certain amount on your trading, is it going to push you into another bracket? You'll need to know, based on what you're going to pay, that if you're taking money out of your account, right? You're taking money out of your trading account. It is income and it is taxable as such. So based on, roughly speaking, I'm just giving a rough overview here, you could then look at what is the amount of tax that is going to be owed on this personal income tax. Now, I'm going to talk about personal versus otherwise in a minute, but personal tax, meaning it's on your Social Security, it's coming into your bank account, it's personal income, then it's going to be taxed as such. So you'll need to plan based on your tax rate, okay? If that makes sense. Jeffrey, great question. Now, I just alluded to something here. This is like I was going to say bull in the china shop. This is not really the right phrase I'm looking for, but it might as well be. It might as well be, because I can tell you, I think, over the last 6 to 7 years, where I've personally really been on this financial journey that I'm on, which I've talked about on the channel before, really coming from a single income home, single mom. We clipped coupons, we saved, we shopped bargains, we had enough, but we didn't have extra. We didn't teach each other about money. I didn't take any finance classes in school. I got saved in my early 20s. I learned that money was basically bad and that if you wanted it, it was just greedy. I lived overseas with the poorest people on the planet, at least some of the poorest people on the planet. And I lived out of a backpack for a long time, right? I was extremely zealous to live as simple as possible. I'm just painting this picture for you guys. And God brings me on this journey, which really started, shortly before Tradeway, but it really opened up when it came to Tradeway. I'm speaking to somebody tonight, whether you're on live or you're watching on the recording. This is for everybody on here, but I'm speaking to somebody tonight because you've had a similar journey and you want to navigate this with integrity and ethics and you want to please the Lord. But you're on here because you know that it's okay to prosper and that in all you're getting, get understanding that wisdom is important. And the wisdom around finances and money has been such an incredible blessing to me and those around me through my life as I've learned this stuff. Why do I say all that? Well, because I want to tell you the next thing that we're going to talk about, to me, game changer. Game changer in my mindset. Game changer in the way I approach things. Now, maybe some of you knew some of this. I didn't know this, and I suspect a lot of people don't know this either. By the way, I see some questions on IRS forms. Let me come back to that and address that in a little bit here, guys. I appreciate you sending that in. I'll come back to that. We need to understand that there are really two forms of tax, okay? Generally speaking, there are two forms of tax in the United States. Anybody pop in the comments what they think that is? There are really two forms of tax, okay? I know the comments take a second to pop in there, but this is important for us to understand as traders, because if we haven't thought this through, then we probably haven't come to some of the conclusions about how this can actually serve us, okay? I think it's really important. Now, I'm going to say it and then, okay, Jeffrey says income and sales tax. Okay, so those are definitely, those are subgroups of tax for sure. Mario says personal and business. Personal and business. Ding, 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 right? No, all right answers there. But I said, generally speaking, there's two main areas, and it's business and personal tax. Now, if you've owned a business already, if you are an entrepreneur and you own a business, or you've worked, maybe in finance in a business or close to a company or a small business, then this is something that you're pretty well accustomed to already. I certainly would hope so, because you've had to deal with it, right? You've had to deal with it. And you've probably seen what I'm presenting to you now, the fact that personal tax and corporate tax are pretty different. They're pretty different, right? What you can do with them is pretty different. Now, let me just paint a quick picture so that I make sure you understand what I mean and what I don't mean by what I just said. We talked already about legal minimum. Legal minimum. Now, I mentioned some deductions earlier for personal tax, okay? This is by no means an exhaustive list, but just for personal tax. Now, somebody said 1099 in here, okay? So I'm not talking about 1099 contractor. I'm talking about your personal tax, your W-2, what you get paid from the job you have. Now, obviously, lots of people get paid 1099, and I'm not necessarily going into that today, but that does start to fall more on a business side of things, because you could potentially have some deductions over there. But for most of us, the job we work, we're going to do retirement account contributions, right? Certain contributions give us a write-off. I'm going to explain what a write-off is in a second for those who maybe are confused with the concept or don't really understand what it is. By the way, I barely understood. In fact, I didn't understand what it really was. I really didn't. I'm telling you guys, I've come so far. I tell people on our broadcasts and in our classes, listen, if you can come from where I came from, then you can, if I can come from where I came from, trust me, you can too. And I wonder if people give me more credit than is due, because I've just had to come a long way. I've learned a lot. And that's why I'm passionate about telling you guys about this stuff. So you can do some retirement account deductions on there. You could do charitable donations. I mean, there are different things that you can do, but there's not a lot that you can do, right? There are some things you can do, and that's a part of effective tax planning through the year. Using a CPA or somebody who understands the ins and outs of these things can really help you do that. And I recommend learning as much as you can about that. That's Dr. Myron Golden's direction to me about a month ago, saying, learn as much as you can, as fast as you can about money. I'm telling you, I take it to heart because it's very important. So you could do that in personal tax, but in corporate tax, there's an enormous amount of deductions. Okay. Now, they're not just pull them out of the air. They have a purpose. There's a way you can do them, and there's a way you can't do them. Okay. But there are enormous advantages that can come into play when you are doing what? Running an at-home trading business. You're running an at-home trading business. Well, wait a second, Blair. If I'm running an at-home trading business and I'm profitable and I'm paying tax on that, isn't there a way I could pay business tax? Okay, let's think about that for a second. Well, why would I want to pay business tax? Well, let's say you're like some of the students we have on here right now. You're in a Tradeway program and you're currently paying fees to be in that program, right? These students are a part of these incredible Tradeway programs because they give them the tools that they need to learn and grow, right? We're not just getting somewhere just because. It's not just going to happen, right? we're pouring into a program that's developing us into the trader we want to be. And we're paying to do that. Well, wait a second. Couldn't that be a write-off? Isn't there business expenses with my trading? Right? Isn't there things I could do that are actually a part of my business that are actually going to what? Lower my taxable income. Now, let me just explain this quick for a second here. For those of that may be watching this live right now, or you're watching on the recording, and you're going, I'm not even really sure what this means. Right off, maybe you just pay somebody to do your taxes. Man, just do it right. Here you go. I don't want to deal with it. I don't understand it. End of story. I don't blame you. I don't blame you. You know, wherever you're at on the spectrum, maybe you do it all yourself. Maybe you do that. But a write-off is essentially going to say, okay, here is a certain financial transaction that I engage in, right? Like I said, we could give to a retirement account, right? An IRA, right? A certain amount of contribution to an IRA every year. And the government says, okay, if you take some of your money this year, Blair, in 2021, and you put it into this specific kind of retirement account, we will allow you to take the X amount you made this year, and we'll allow you to lower the amount we get to tax, right? Every time you get a write-off like that, you get to lower the amount. If it was a business expense, then that lowers what you made as income, right? Because that wasn't really revenue, was it? So it lowers it, and instead of the government taxing us, let's just say this business made $50,000, instead of taxing us on 50, what if we had $30,000 of expenses, right? What if we had to buy equipment? What if we had employees? What if we took trips? What if we had to pay the CPA? We're traders. What if we had to pay the tax guy? What if we paid for Trader Pro all year? What if we took that trip with Tradeway to the DR that's coming up in May? What about the books we bought? What about the trading software? And the list goes on. These are all things that could be deducted under a business. You cannot do that under your personal tax. It's not available. Those are business expenses. Okay? So this is where we really start to see a difference in the two areas of tax. Okay? Now, again, I'm going to say this again for those who've joined a little bit later. I am a licensed securities advisor. I am not a tax advisor. So today's episode is not about giving you tax advice. Today, like I said earlier, is about going, there's this room we're going to look around in, and it's trading and taxes, and it's the fundamentals that I think we need to know. It's really going to whet the appetite for us to go, this is actually a really important area for me to know. There's some things that I've learned today that convince me, I hope, that what you don't know can't hurt you is definitely false. No, what you know will help you. How about that? What you know will help you. In all you're getting, get understanding. So if we had $50,000 of revenue and we didn't know any better, we could just say, all right, tax us on all 50,000. All right, tax us at the corporate tax rate or whatever our entity demands for taxes, and you just pay it. But if you knew what you were doing, right, or knew someone who knew what they were doing and could do it for you, then we could actually lower the taxable amount. You could invest in your business and pay less tax. Now, obviously, it doesn't matter if we have a business. If the business pays you in your personal account, guess what? That's personal tax. You still got to pay that tax. So in no way are we talking about not paying the taxes we owe, but we are talking about how is the system built to help business owners navigate the tax code so that their business can thrive. And how could you as a trader use that to your advantage? Troy says, seems like the more I earned per time spent, the more taxes was taken out. That's with the job. Well, hey, man, the more you make, right, the more you're going to pay. So it's why it's so important, even in personal tax, right? Even in personal tax, it's important that we understand, how does this work? What are some ways? Listen, let me just tell you this real quick. If you knew you were going to pay Uncle Sam a certain amount of tax at the end of the year, and you could have taken some of that and put it in a retirement account for you and your spouse, it would be your money in your retirement account, or you could just pay Uncle Sam and that would be at the end of it. Which would you rather do? Right? Which would you rather do? I think we both would agree. Well, I'd rather invest in my retirement. Well, that is what they are incentivizing us to do, right? And there are other things we can do as well. This is why you'll see sometimes the wealthy and different people, they're just looking for charitable donations at the end of the year because they'd rather sow that money into a charity than just pay it straight up in tax. On the business side of things, as a trader, you could, again, invest in that business. Invest in your trading education. Invest in your tools. Invest. And that is something, I see there, Troy, yep. That is something that using business tax helps you do. So, of course, the question then is, well, wait a second. You said I can't do that under my personal tax. Well, how does that happen? Okay, how does that happen? Well, how that happens is you and I, we need to look at different kinds of business entities. What does that mean? Well, you may have heard somebody's company is, Dave's Painting LLC, right? The LLC is a kind of structure. It's a business entity, okay? There are multiple kinds, right? It might be a C corporation. It might be an S corporation. This is where that gets a little more specific. It's beyond the scope of where we're going tonight. I don't need anybody to really understand that tonight. But what I'm giving you an insight into is there are different kinds of businesses. And when you set up your trading in one of these entities, okay, this has to be done correctly. It's not hard, right? You get a professional to do it, and it happens all the time. This is being able to, the amazing blessing of business in the United States of America. It's an incredible, incredible opportunity and blessing. But we're not necessarily going into all the ins and outs of that tonight. What you would need is somebody who understands how to do this. Okay, I'm actually grabbing a link for you right now while I'm talking to you because I want you guys to understand. Let me copy that. I'm going to pop this in the chat. Yes, you're correct, Jeffrey. That is the correct definition here. LLC, limited liability company. I didn't see that. Not necessarily a corporation, company. I just popped a link in there for all you guys out there in YouTube, all you guys out there Facebook. This is a free webinar. Okay. This is a free webinar. If you sign up for this, we have some friends over at Prime Corporate Services. Okay. Prime Corporate Services. They're going to give you a free webinar. Now, these guys are tax guys. Listen, this is a window. This is through the doorway, like I said, right? But these guys are actually tax professionals. They understand how to do this. They understand how to set up entities. They understand how to answer all the questions that you might have around this area. This is what they are licensed to do. And that's why they're friends of ours here at Tradeway, because we got to have people for you who know how to do what you need them to do. So if you go, you can sign up for that webinar. It's a free webinar. You get to meet them. You get to meet one of our very own, if you haven't already, Miss Christy McLeod. Her husband, actually, Boyce McLeod, may be on there as well. If you haven't met them, they are a lot of fun. They will definitely make that fun. So I'd love for you to go over there and meet them as well. But you're going to get this exposure to our friends who really help us with taxes, planning, understanding this as a trader. What can you do? How can it benefit you? Look at some of the numbers and ultimately look at how could and when could setting up an entity help you in your trading business to make it a real business and give you these advantages, okay? Because you really do at some point want to take advantage of these Advantages, right? That's a Myron Golden teaching. Take advantage of your advantage, right? What a shame it is when we have advantages that we don't use. We don't use. And that's one of those things I think in the cultural conversation that I recognize that, there are advantages there that unfortunately folks just don't understand. Now, I want to say this. It's not always a good time to start a business entity in your trading, right? It's not always a good time. I'm not coming on here and saying to you, everybody out there has got to go and open a business entity ASAP, right? No, we want to help you decide if this is right for you. Some of you are just starting your trading business. What you need for your trading business is sufficient training, right? This is not just trading. This is a trade. We're learning a trade, right? It's an incredible trade. It's 2021. I think this is the greatest financial opportunity we have in 2021. And it's very popular this year because people are finding that out. But that doesn't necessarily mean that you're ready to start an entity. If you're not making any money yet, right? There's no money coming through yet. You're just starting, not profitable. You don't need, I'm going to soften that a bit. You probably do not need an entity yet. Okay. Now there are some exceptions to that where looking ahead and planning ahead could be helpful. And that's something that I'm sure will be a part of this webinar as well. However, you really don't need to rush if there's no revenue, right? If there's nothing coming through yet, then you're just in the process, but you definitely want to have a plan in place. And this webinar, no matter where you're at, is going to help you do that. What you don't know can hinder you, right? What you know will help you. Troy says, life is a job within itself. Spend life the best way you can. Yeah. And save as much as you can. I'm trying to save all the time, right? Why give it away when it can be invested and sown in the ground? A lot of our students, what their number one concern is? I want to be a good steward of what God gave me. I want to be a good steward. All right. Well, let's learn how to take what we've made and keep more of it to put in worthy things. Again, legally, ethically, but with wisdom, strategically. Jeffrey says, I was impressed. I talked to the owner of PCS, and he told me it did not make sense for me to open one yet. And I appreciated his honesty. This isn't just, hey, let's get you to do something, sign on the dotted line. No. This is professionals who care about traders, helping them implement things at the right time. And that's why Jeffrey said what he said, right? This is something that, this is who we are. We wouldn't work with them. Listen, I can tell you more than you know, we would not work with them if we didn't think that they were people who could really help you. So why do I say even that? I bring that up with them. Sign up for that webinar. Obviously, there's going to be a ton of great information. We love these people. But like I said at the very beginning, this is a very overlooked topic. Very overlooked. Very overlooked. So it's something that we want to make sure folks know about. Remember this, quick recap. If we're going to make money in trading, that's income. So we're going to pay taxes. Hey, one way or the other, if we're making any money, we're going to pay taxes. The question is, how do we want to do that? Short term, long term? Well, we looked at already. If I'm a trader, I'm going to be looking almost entirely at short-term trading, short-term capital gains tax because of short-term trading, okay? Not the long-term. That's going to be taxed on my personal income at my personal tax bracket. Unless it pushes me up into another bracket, I'm going to pay the bracket that I expected to pay this year. That will be personal tax. But we've also got that paradigm shift, right? That massive shift is, what if I wasn't under personal tax? I was under business tax. When you're ready, this is where you can go. But there's also a lot of great tax information and professionals, like I said already, you're going to get access to on this webinar. So if you got questions about any of this stuff, bring them to the webinar. Sign up for that free webinar and go ahead, jump on there. It's worth the investment. I promise you, it's worth the investment to spend the time on there. Because like I said, in my whole journey, this conversation was a huge shift on how this works. And something that I'll never forget for sure. Thank you, everybody, for being on here. Taxes is like having to wash the dishes. Thank you, everybody, for being on here tonight. I'm glad you were with me. Somehow we always land on 45 minutes, guys. I don't know how we do it, but we always do it. We land on 45 minutes. Mario says, leverage the experts. If I had more time, I would tell you this is beyond the scope of our episode today, but hopefully you and I have spent enough time together where we've connected a little bit and we can just kind of share back and forth. I have been taking my own advice. What do I mean by that? Well, practicing what I preach. And if you guys have heard me on any of my other broadcasts, I talk about mentors, man. I'm talking about what you said there, Jeffrey. Leverage those experts. Mentors. I'm telling you, mentors. I've got a couple of mentors in my life. I just said, you know what? I need to up my game in this area. I need to up my game. I'm trying to figure out a lot of things on my own. And you know what I'm getting on my own? I'm getting the results I've always got, right? I'm getting the results I've always got, whether it's in your relationships, whether it's in your health, whether it's in your finances, whatever it is, right? Your passions. Link up with somebody who is where you want to go, right? Make the investment in you to link up with someone who's at the place that you want to go. And I'm not only fired up right now about what I'm receiving from these mentors because they're asking more of me, but they're taking me to another level. I'm fired up about the whole idea of mentors in general because I'm getting breakthroughs that I've never had before. And I want you guys to have financial breakthroughs. The knowledge is the first step to that breakthrough. So sign up for that webinar. Join us on there. And I'm with you there, Jeffrey. Thanks, y'all, for being on once again tonight. If you haven't already, hey, just go ahead, click that like button on Facebook. It'll let you know whenever we're going to go live through the week, or you can go ahead and subscribe on YouTube. We will let you know when we're going to go live on YouTube. You can share this with anybody that you think might need to hear this message as well. Make sure you check out the Word on Investing podcast as well. We've launched a podcast. Incredible Season 2 launches last week. My favorite so far, Tom Sosnoff, the creator of Thinkorswim, owner of Tastyworks, amazing trader, on there with David Mitchell. If you haven't heard that, head on over everywhere podcasts are found. The Word on Investing podcast. It's incredible. Ruben says, thank you, Blair. You always have a great and valid reason to do what we must do. Hey, I hope it blesses you, and that's why I present it to you, Ruben. So thank you so much for chiming in. Chris, thank you for being on tonight. I know everybody's busy. Precious time. I'm going to let you go. Thank you for spending your time with me tonight. Back tomorrow with a Tip Tuesday, Word Wednesday, and then I will be back with you on Thursday for our Stock Talk this week. Don't miss it, and I'll see you guys next time. Thanks.